Hey, everybody. Thanks for tuning in to 60 Plus Uncensored. And today, for this episode, I'm very excited to have Chris Orestis. He is the retirement genius, and it's going to be a really interesting conversation. You know, Chris is actually one of the most quoted experts in the insurance and financial services industry, and he's appeared in the New York Times and Wall Street Journal and CNBC, AARP, USA Today. Basically, if it's major media, you're going to find Chris on there talking about financial issues, retirement issues, and health and long-term care. He has over 25 years of experience in this industry, and he actually has a very interesting background as a political insider and a senior issues advocate in Washington, D.C., and he's actually worked in the White House and for the Senate Majority Leader on Capitol Hill. So I'm sure Chris has lots of interesting things to share with us today. So, Chris, thank you so much for making yourself available for today's
Well,
podcast.
Sebastian, it's great to be on. Thank you for inviting me. I'm excited to join your podcast, and um, it's a very timely discussion. What you're covering, what we're covering, and it's what are people doing to be prepared for retirement from a number of perspectives, financially, their health, their long-term care futures, and their lifestyle. Bringing those things together. What we say at Retirement Genius is you need to have those things in balance to retire like a genius, and that's what we focus on. That's what we've focused on for over 2 decades now.
All right. Okay. Very good. Well, listen, before we start talking about the retirement part, tell me a little bit more about this White House work and working for, the Senate Majority Leader on Capitol Hill, because I'm a political junkie, kind of. I'm like apolitical, but very interested in like how all that works. So can you share anything about your work there?
Absolutely. And the world of politics is fascinating. It's changed significantly from when I was in Washington, D.C. in the 90s. I showed up out of college and worked for the transition team in the White House, then went to work for the Senate Majority Leader George Mitchell from my home state of Maine. And then I became a lobbyist, and I was a lobbyist for the insurance industry for a number of years, representing life, health, insurance carriers, and working on issues that, in particular, that became very a big focus of mine was long-term care and the coming aging baby boomers. Now, back in those days, the aging baby boomers were way, it looked like in the distant future, and now we're here. In fact, we're at a point where between now and 2030, the very last of the baby boomers will turn 65, and the first Gen Xers start turning 65. So,
Right.
those years in Washington D.C. were during the healthcare reform days. There was a lot of changes happening in health insurance, managed care, long-term care, which is a big part of where our system is today. The advent of HIPAA, Medicare Advantage plans, Medicare Part D drug prescription plans, where much of how MedSup is structured today. We were working on all those issues, and now we're here in the middle of it as that population we were thinking we were getting ready for is now here, and our fingers are crossed. We've done some good work to be ready for where we are today, but certainly when you look at the aging population and the challenges around how you're going to fund retirement and things like the expensive costs of long-term care, there's still so much work to do and so much urgency behind that work that I focus with our company, Retirement Genius, on those issues, both in the private sector, in the market, working with consumers, working with agents and advisors of all sorts. We work with insurance agents, we work with financial advisors, we work with elder law attorneys, we work with care providers, we work directly with the big home care franchises and assisted living companies across the United States to bring solutions to the table. And I still remain active in politics to this day.
Yeah, so quite a bit of big political news lately, like this one big beautiful bill that came out.
Mm-hmm.
What does that mean for changes to like Medicare and Social Security? I mean, like I think there have been some changes. Can you share with us anything that you know about what's changed in the BBB?
Yes, absolutely. I would say of the primary entitlement programs, Social Security, Medicare, and Medicaid, Medicaid is by far the most affected. There has been significant cuts leveled against Medicaid, which will translate also into cuts into subsidies for the Affordable Care Act, ACA plans. You'll see a drop in enrollments. You'll see a rise again in the uninsured. And there was also significant cuts made to food assistance programs like SNAP. So for seniors and people who are living on fixed incomes, they'll really feel that impact. If you're on Medicaid, you're going to feel those changes. You're going to feel in any realm that you are in Medicaid, you're going to feel it. You're also going to feel it if you get food assistance from SNAP. Those are the areas where it was most impacted by the BBB.
So my understanding is that these cuts that have been made are basically to pare back Medicaid and SNAP to where they were before they got boosted for the pandemic. Is that true, or what do you know about that?
There certainly was growth in the programs, and some of the coupling of Medicaid with ACA subsidies to increase coverage. You know, when the ACA came out during the Obama years, it was a political target and vilified to a great degree, but it was never intended to be a plan that on day one was what it was going to be for the rest of its existence. It was a first step into creating a structure to bring more low-income people onto insurance coverage, which translates into better outcomes and a better, both physically from a health perspective and also economically. The more people that are covered, the more people that are receiving health care, the better it is for everybody. If you're getting your health insurance through a carrier that you're getting it through let's say your employer, the health of ACA you'll feel that in your coverage because it translates across the entire economy and everybody receiving health coverage. So if we have an all of a sudden rise of say 15 to 20 million uninsured that are currently insured today, we're going to feel that. Everybody's going to feel that.
Right. And so the cuts to Medicaid, I understand that Medicaid is like one of the primary payers of long-term care insurance or long-term care for people in nursing homes who don't otherwise have any assets,
It
right?
is
So
the primary
are we going to
payer.
see it is the primary, right? So are these people then are who may be planning to have Medicaid pay for their long-term care in their say late 70s and 80s and even beyond? Are they going to be out of luck, or what do we know about that?
There will be a trickle down effect because Medicaid is administered at the state level. And so as dollars are reduced at the state level, states then have to make adjustments to how they're allocating their Medicaid dollars, what are their eligibility. Medicaid, unlike Medicare, is not a federal national program. It's not every state is exactly the same for Medicare. Medicaid is state by state. There are differences in each state in how they run, how they fund Medicaid. Every state manages, they get an allocation of money from the federal government, then they have their own funds they put in, and then they run the program inside their state. So as those funds shrink, the states then have to take a look at where do we make cuts, and that can, and many experts are predicting, will translate into nursing homes and skilled nursing care, which is paid for by Medicaid. And I can tell you that Medicaid providers run on very thin margins. You're not, you're maybe running at a 3 to 5% margin on Medicaid if you're running a nursing home that's primarily Medicaid beds. And if all of a sudden you get a 5 to 10% budget reduction, you're now operating in the red. You're underwater. That means you either have to reduce staffing levels or you've got to reduce how many beds you can fill. Maybe you have a 100-room nursing home and then the cuts come in and either you've got to get rid of staff and or you've got to close down beds and say, well, we can't staff and run and fund 100 beds, we're going to have to run on 75 beds. That starts to translate and trickle down to impact everybody.
Wow. So how much of Medicaid was cut? Is it like 10% or 50% or any idea what the
It,
size of that
it,
number
it would
is?
translate into about a 10% cut over 10 years. So about $1 trillion.
About $1 trillion. Okay, that's quite a
When you
bit.
combine
Well, thank you
Medicaid
so much
and
for that.
SNAP together, you're looking at about $1 trillion cut, which the flip side is, there's the tax cuts that were also promulgated through the BBB. And in many ways, it was looked at the Medicaid reductions would help pay for the tax cuts.
right.
So that's the
Okay. Well, thank you so much for.
public sector side of things. And then what does that do? That then opens the door to even more emphasis, more importance on the private sector, on private pay. So, continuing the discussion about long-term care, if it starts to become harder to qualify for Medicaid, to get the necessary funding from Medicaid to pay for skilled nursing care, that then falls back on the individual, on families, and on their ability to pay themselves, which is known as private pay. And we've seen an evolution in the market over the years in a big increase in care being provided by family caregivers and in a use of long-term care insurance and other alternative assets for people to be able to pay for long-term care services.
Well, it's very good that we are talking to you today about that very topic. But before we get into that topic, a little more background. Where did you get that name, Retirement Genius? That's like a genius name.
Yeah,
Have
yeah.
you had that name for like a long time,
Well,
or?
I've been in the business for over 2 decades, but it was in 2020 that we, through some business opportunities, launched a new brand under the name Retirement Genius and expanded the offerings and what our mission was. When we first came into the business over 2 decades ago, we were focused on singularly how do we help people access private pay funding for long-term care. And one of the things that we pioneered was a transaction that is known now as a long-term care life settlement, or an LTC life settlement. We'll talk more about that. But back in 2020, we decided that we wanted to talk about more solutions to a broader audience, and the idea of Retirement Genius, because people kept seeing me in the media, and once in a while I'd be referred to as a genius, or people would say you get him on stage and he can cover any topic, get him, interview him and he'll cover anything. People had referred to me also as the Swiss Army knife of senior issues. Like we could talk about and cover anything. But we thought Retirement Genius was a better name than Swiss Army knife. So we went with Retirement Genius, and then the branding with the logo, with the caricature of me with the bow tie. And if you see pictures of me, if you see me out and about, you'll see I'm often wearing a bow tie. Which is a holdover from my days in Washington D.C. when I wore a bow tie during my political career, and we've kind of put it all together into a brand that, for many people, they hear it once, they don't forget the name, they see the logo once, they don't forget the image, and it's at the point now when I'll be walking through airports and people will shout from across the way, "Hey, Retirement Genius, where's your bow tie?" Things like that. It's really funny.
Well, it's really smart because it's really great branding and it's easy to remember.
Yeah, yeah, and you want your
So,
brand to be that.
yeah, yeah, definitely. You want it to be catchy,
Yeah.
sticky. So, what's the biggest misconception that people have about planning for retirement and planning for long-term care, do you think? Like, is it ever too late to start? I guess maybe it is. Or what's a good time to start?
Well,
Or how do you catch up?
I'll say this: it's never too late to start, but the earlier you start, the better. And the biggest misconception about long-term care is people think it's not going to happen to them, but it is. The
Well, it's
vast
not
majority
gonna
of
happen to me.
people will need some form of long-term care in their remaining lifetime. At some point, they're going to need long-term care support and services, and it's expensive. And the problem is people think it's not going to happen to them. They're not planning for it. They're not communicating with their family members about what they want if the day ever came. What do they have to work with for assets, for how are you going to pay for it? And then what ends up happening to so many families, and I'm sure many of your listeners would agree that they've seen or had this experience themselves, something happens to a loved one, they're in the hospital, and the discharge nurse says, okay, we're discharging your loved one tomorrow to a skilled rehabilitation facility. This one's in our network. She's going over here. What do you have in place to pay for it? Do you have everything set? Do you have all your paperwork? Everything's done. And everybody starts looking at each other like, what do you mean? We don't even know how this works. Doesn't our health insurance cover this? Doesn't Medicare cover this? Social Security cover this? The answer is no. Health insurance does not cover long-term care. Social Security does not cover long-term care. Medicare only covers short-term rehabilitation care if you're discharged from a hospital, but that only lasts 100 days. And you only have partial coverage for the majority of those 100 days. You're out of pocket for a chunk of that, and Medicare is paying for a portion of that. What are you going to do? And that's when people start scrambling to try and figure out how do we navigate this? How do we understand this? What do we do next?
So what do they do? I mean, because normally it's like a crisis that happens, right? It's like a mom falls, she breaks something, right? And then she needs to go to the hospital, and then, yeah, she has to go into acute nursing facility or something. What do they do all of a sudden? Because what's that going to cost? $15,000 a month or more? I mean,
yeah. I mean, if you were paying out of pocket to go into a skilled nursing facility, it's extremely expensive. Home care is not cheap. Assisted living, memory care, all of it. It is going to be one of the most expensive propositions that's going to be put into a family's life in an overnight situation driven by urgency and the need for caring for a loved one who no longer can take care of themselves or is in a position that they need to be rehabilitated so that they could try to return to home. But what we find is once you're starting down this path, it's pretty much leading in a one-way direction. Sometimes you might get discharged from a rehabilitation center, go home for a little while, but you're going to be back in before you know it for the most part. For many people, they never leave. They get admitted and they stay. They're always thinking, oh, I'll be out of here in a couple weeks. My kids are coming to get me and take me home any day now, but they're not able to. So now the question is, how do you pay for it? Well, there's two ways you can pay for long-term care. Either Medicaid, if you qualify for Medicaid, but to qualify for Medicaid, you have to be below the poverty level. People, I always say, remember this about Medicaid. It is built to be the payer of last resort. So if your goal is to spend down and get onto Medicaid as fast as you can, be careful what you wish for, because now you're on Medicaid. And you're a ward of the state. They're going to decide where you go. You're going to be most likely in a nursing home, sharing a room with one or two other people, and you're getting the daily Medicaid reimbursement rate at a Medicaid facility. That is not the same thing as a private pay assisted living facility, which I can tell you, I've been to many. It's like they're a Ritz-Carlton for a lot of these. These are beautiful places with cocktail parties and barbecues and transportation to the mall and museums, and that's not happening at nursing homes on Medicaid, okay? And you want to age in place and stay at home? That's private pay for the most part. Now, once in a while, are there exceptions to qualify for Medicaid funded care at home? Yes, but they are rare to qualify for a Medicaid waiver to be able to age at home. Most of the time, you're going into a nursing home. So that's private pay. You're on Medicaid. You're now below the poverty level. You're a ward of the state. You are no longer in charge of what's going on. If you're private pay, okay, instead of Medicaid public pay, now you're private pay. Well, now that's a matter of, do you have long-term care insurance? Do you have enough income and assets to just cut checks and pay for it on a monthly basis? Do you have other assets you could consider tapping into? If you're the owner of a home, you could look at the potential of a reverse mortgage or a HECM, a home equity credit line to pay for your monthly care needs while you're at home. If you have a life insurance policy, a thing we have specialized in for over 2 decades, you could sell that life insurance policy for a percentage of the death benefit while you're still alive, and then take that money and use it towards your long-term care needs. And that's now known as a LTC life settlement, a long-term care life settlement, which families have used all over the country for any form of care they want. We've paid out millions of dollars of care over the years through people liquidating an unneeded or unwanted life insurance policy. Instead of just abandoning it, they're able to sell it off, no longer pay premium payments, get a lump sum payment for the policy based on its death benefit, and then turn around and use that money to pay for care, keeping them private pay, allowing them to choose, where am I going to get care? Am I going to stay at home? Am I going to move into an assisted living community? Or is my care needs acute enough that I need to go into a skilled nursing facility, but I'm going in private pay and I can get a private room? I'm at the front of the line, I'm private pay. I can get into the best and get the best versus on Medicaid, and now you're on the bus and you're getting taken over to whatever Medicaid facility is in your approved area where there's an open bed that they can put you in.
Right. So when a crisis like this happens, how many people actually have the income or long-term care insurance to actually make a comfortable move into a skilled nursing or assisted living? Is it like 10%? Because I would think that almost nobody has prepared for this. Is that correct?
There,
Or
it's reflective of where people are in their retirements. How many people are if you're kind of relying on Social Security to be the vast majority of your income for your retirement, you're probably on the path to qualifying for Medicaid sooner than later. But if you have accumulated savings, assets, investments, maybe you have a long-term care insurance policy, you still own a life insurance policy, you still own your home, you have an annuity, or you have money to put into an annuity that can be structured to help pay for long-term care. There are people out there with the resources to be able to do it. And then what ends up happening sometimes too is families, it becomes listen, the long-term care journey is a family journey. Rarely does somebody go into long-term care alone. The family is usually involved. They're helping with sorting through the situation, helping to try and find the best, most appropriate care, figuring out how are we going to pay for it. And guess what ends up happening? The adult kids either end up supplementing the care by taking turns caring for their loved one at home and pitching in money out of their pockets to help pay for care needs. But there are people that have those assets that they can tap into as well to either prevent that from happening or lessen the impact of something like that from happening.
right. So tell me about long-term care. So I think long-term care insurance.
Sure.
So how much does this typically cost? Does it increase the older you get, or
Yeah.
I don't really know very much about long-term care
Yeah,
insurance.
there's long-term care insurance, you can typically get it up to about the age of 70. I'd say the vast majority of policies that are purchased on an individual basis are for people between the ages of 55 and 69. Once you hit 70, it gets much harder to qualify for long-term care insurance. And like any other insurance that you're going to buy, let's say life insurance, or if you're getting health insurance, the healthier you are when you buy it, the lower the premiums, the lower those costs are going to be. So people can buy individual long-term care insurance coverage. People can also buy it as a combination of long-term care insurance and life insurance. These are known as hybrid plans, where you're buying a life insurance policy that has a long-term care insurance rider that, if you qualify to trigger, will change the death benefit to a long-term care benefit and start paying out towards your care. People can also qualify to get long-term care insurance if employer offers it as as part of their group benefit package. And I would encourage your listeners and anybody listening that if they get an opportunity to get long-term care insurance through an employer, through a group benefit, do it. That is the cheapest way you will ever get long-term care insurance in your life. Grab it and then keep it. Because if you leave your job and you have life insurance, long-term care insurance, disability insurance that you got through your employer, you can keep those policies and take them with you. You just have to take over the premium payments. Now,
Right. So,
there's about
I was
seven
going to
and a
ask,
half
like, so
million long-term care insurance policies today in this country that people own.
that's not very many.
You have a population of 335 million people, and there's 7.5 million long-term care insurance policies. Now, think about
Yeah.
this. By comparison, there's 260 million life insurance policies. And all of those are assets owned by the policy owner that as they get older and their health is becoming impaired and they're getting to a point that they might need health and long-term care services, they could qualify for a life settlement potentially and use that money to help pay for care. And then you have everybody out there that owns their homes with home equity, which you could tap into. Either sell your home, take a reverse mortgage, take a line of credit, and use that towards paying for your care needs. So there are options for people to tap into, and that's what we've focused on for the last couple of decades, is helping people get to those alternative assets when they need the care. The thing about a life settlement or reverse mortgage, those are for people in their 60s and above, and those are the people that can tap into those kind of resources at the time they need care. If you need care today and you don't own long-term care insurance, you can't buy any. You're not going to qualify. You can't buy home insurance after your house burns down. You've got to get it before you need it. But if you own a life insurance policy, you could cash it out through a life settlement at the time you need care. If you own a home, you could take a reverse mortgage out at the time you need care and use it to age in place and hire home care. Things like that, those kinds of options.
So, I can't apply for long-term care insurance after 70 years old. So between 55 and 69 is prime
Yep.
time. But they continually renew those policies, like no matter your health history or age,
Right.
or at some point do they just cancel your long-term
No,
care
no.
insurance
As long
policy?
as you pay premiums, you cannot have a policy canceled. If you're paying your premiums,
Okay.
your policy stays in force for long-term care insurance, for life insurance, disability insurance, anything like that. As long as you're paying your premiums, your policy remains in force.
So I have to assume, based on the fact there's only 7 million people who have them, that they must be very expensive. So what's it cost? Like, let's just say I'm 60 years old. What is long-term care insurance and in good health, right? Like, I'm a reasonably healthy person. What would that cost me per month for long-term care insurance?
Well, it's going to depend. It's going to depend on what benefits you're getting. There's a whole variety of are you going to is it going to have the ability to keep up and increase its benefit with the cost of living? Would it translate to cover home care as well as nursing home care? You know, there were long-term care insurance policies that were nursing home only, but there's others you could buy where you could also cover home care. You could cover assisted living. So it depends on the features that you're buying that will impact the cost of care. Does the care have a cap or is it unlimited care? That's going to be a different price tag. You know, that you could buy a policy that says after $200,000 it's done. You could buy one that is unlimited care for life. That's going to be much more expensive. So it depends on what you're buying. And then if you buy a life long-term care hybrid, that's going to be priced differently too, because now you have a death benefit and a long-term care benefit that are both underwritten and priced, one or switching over to the other. So it's a range of pricing based on your age, on your health, but then the features and benefits that you're buying for the policy. Also, are you buying one individually, or maybe you're buying one together with your spouse? You could buy a two-person spousal coverage policy as well. That's going to be a different price. So the bottom line is when you're getting to the point that you're trying to make these kinds of decisions, you want to be well informed. You want to do your homework. You want to do your reading. Look at companies like us, Retirement Genius. You go to our website, retirementgenius.com. We have all sorts of great information there that you can read and learn about. But you want to make sure also you're working with licensed agents, licensed advisors. They will answer your questions. They will help walk you through and piece together what are your best options. And brokerage agents, they'll go out and shop around for multiple policies to get you the best rates, create somewhat of a competitive environment to get you the best rate, the best policy mix. You don't want to go out and do this on your own. You always want to be working with professionals. Licensed agents and advisors are key. And remember, they're paid commissions by the insurance companies. So you're hiring experts at no cost to you who are going to be paid by the insurance companies a commission if you go forward to buy one of the policies.
Right, and they're not going to give you a discount if you buy direct, right? It's like
No,
the policy
no,
is the
no,
policy
no,
cost.
no. You'll
Right.
see a lot of
So,
direct advertising online, but by the time you contact them, you're going through the same process. They're underwriting you. You might as well have an agent holding your hand, representing and negotiating for you, who knows what they're talking about, who's experienced and who does this for a living, than trying to figure it out on your own. You're not saving anything by not working with an agent. That's not money in your pocket. That's really you're losing money by trying to do it on your own.
yeah, so you mentioned a word they're negotiating. Do they negotiate on the policy cost, or you
Well,
just
what they'll
tweak
do is
the benefits
they'll put it
and
out to multiple carriers, multiple insurance companies, and let the process of and they'll talk to who they say, look, I've got this from these guys. This is a much better package. What do you have? And they will work hard to get you the best possible insurance policy benefits at the best possible premium rates that you can get.
okay. Well, let's just say that I'm a 69-year-old male in reasonably good health, and I just want like an average long-term care policy. It must be pretty expensive, right? Like $1,000 a month or 2,000. I mean, just what's the range?
It depends. It's different carriers, different states price differently. It could be that much. It could be less. It could be more. I'd say if on an annual basis you were in your mid 60s and you were paying $5,000 to $8,000 a year in premiums, and by the way, paying monthly premiums isn't the only way to pay. You can set up, like a 10 pay plan where you make a lump sum 10 times over some period, or you could pay one large premium to just buy the policy and be done. There are people that are taking money, let's say, out of with some tax advantages, by the way, out of your 401k, your retirement savings, and taking a lump of money and using that qualified tax deferred money to buy a qualified long-term care insurance plan. You can roll over retirement money into buying a long-term care insurance plan, and not even feel the impact out of your daily monthly cash flow. Just sort of a
Okay.
reallocation
Well,
of how you've set up your retirement resources. You've taken a little money out of your 401k to put it into an insurance policy that's going to protect your financial and healthcare future by getting that policy now. Another good way to think about doing it.
okay. Well, let's just say that I'm past 69. Let's just say I'm 70 years old, and all of a sudden I'm concerned about long-term care and just retirement in general. What do? You turn 70 years old and you don't have like a large 401k or IRA, and maybe you have a house, that has a few hundred thousand in equity in it. What do you do at age 70 to start preparing for, the eventuality that you're going to need long-term care?
Mm-hmm. Well, at 70, by 70, one little side note, uh, at the age of 70, if you had not yet elected to take Social Security, when you take Social Security by the age, you qualify at 62. But by the age of 70, for those that wait to start taking their Social Security benefit, they will get the maximum monthly benefit for the rest of their life they could qualify for if you wait to age 70. The difference between collecting at age 62 and 70 is almost twofold in what you would get for a monthly benefit. So let's say you've had Medicare coverage, you've got Social Security, you have your home. One of the questions we always ask too is, do you still have a life insurance policy? Because if you do, that might be a way we can help you pay for long-term care. And then it's a matter of working with, do you have anything saved, any income saved, anything invested? You can start drawing off of that at some point in the future to help pay for your care. So you could do a combination of things. Some of your Social Security benefit, some of the equity in your home, some of your income. If you have a life insurance policy, you could look at doing a life settlement to add that to the mix. And now you have income streams from more than one place that could come together to help you pay for the cost of care. Now, if you don't have those things, and as I had described earlier, the person, let's say, who's primarily relying on Social Security for their monthly income in retirement, well, you might actually be the right candidate to keep moving forward towards Medicaid. Okay? That Medicaid is designed to cover people who are below the poverty line. And if you're living, and if Social Security is, say, 70-80% of your monthly income or greater, you're pretty much living at the poverty level. And you would be a candidate to go on to Medicaid at the time you would need care. So Medicaid is certainly an option, but it's the option of last resort. You want to start with, what do I have for assets? What do I have for income coming from Social Security, savings and investments? Could I tap into home equity? Could I tap into an existing life insurance policy? Those kinds of things. Can we bring enough of that together to cover the costs of care? And maybe it does require some assistance from family members who help with the caregiving at home in particular. And then at a point where if you exhaust those resources, or even those resources are out of reach to begin with, then Medicaid really is the option to be looking at.
Okay. So let's just say that I'm 60 years old. Should I be looking at life insurance at 60 years old as part of my retirement plan, or are there better strategies, at that age to plan for retirement?
No, you want life insurance, long-term care insurance, life insurance, maybe even a final expense policy at some point in the future to help cover funeral costs down the road when that day comes. But having life insurance, because number one, it will provide a tax-free death benefit to any beneficiary you name. So if you have children, grandchildren, a spouse, having life insurance protection in place in case you were to pass away, and that additional income is there to step in your absence, is a very smart move. But as you age and you get to a point where you need care and you own that life insurance policy, now it's become an asset you could tap into to help you pay for long-term care.
Yeah, I was on a life insurance website looking at life insurance, and they would only give me, I'm 54 years old, a $300,000 policy. That was the max they would pay out. It was a term policy. That seems like not very much money. Is that normal?
$300,000. What is or isn't enough money is always relative to anybody's life, and I always sort of point to this. There are those out there that say, there's some pundits out there that are known for a little bit of fear mongering as they tell people, if you don't have $5 million, you can't retire in America. And I don't agree with that approach. The approach is, what percentage of your income while you were working can you replace while you're retired? You want to be shooting to replace 50 to 70% of your income in retirement from the mix of Medicare, Social Security, savings and investments. So a $300,000 death benefit could be remember, if you passed away and you had a spouse or let's say a child who then was the beneficiary of that policy, you pass away, they're getting that $300,000 tax-free. That's how life
Right.
insurance works. But if you decide as you're getting older and you're getting to a point where you need care and you've got that $300,000 policy and you wanted to liquidate it through a life settlement to help you pay for care, that could be tens of thousands of dollars. That could be six-figure money coming to you to help you pay for care. So a policy of 300,000, 500,000, $1 million. The minimum size policy, by the way, for people to do a life settlement is 100,000 of death benefit and above. And typically for people that
Okay.
are 65 and older with health impairments, closer and closer to needing care.
Okay. So, do you work mostly with the older adults themselves, or do you work a lot with the families, the adult children as well? Who's mostly that you work
Yeah,
with?
great question. We do work directly with aging adults, but we do have a lot of interaction with the adult children. Again, the retirement journey and particularly the long term care aspect of that journey, it really does involve the family. It's very much a family process, a family journey. So we end up interacting with and engaging the adult children oftentimes as we work through and provide information and guidance towards resources. Uh, it's really oftentimes a matter of the family dynamic itself.
So, a lot of the times, though, I think you'll find that the adult children realize that their parents sort of bury their head in the sand and they don't want to think about, what's coming or planning for it in any way. Can an adult child reach out to you and ask for advice about what to do with their
Oh,
family, or do you always start with,
yeah, absolutely, absolutely. They could we people can reach out to us through our website at retirementgenius.com. They can call us at 866-602-5000. And we have people standing by. We have information at the ready to help answer questions, look at things like how to address long-term care needs, what assets do they have, what is it that they're dealing with. Here's a piece of advice I often give to people too, and it goes back to where you said, what's the common misconception about long-term care? And it's that thought that it's never going to happen to me. Therefore, there's no communication about it. There's no planning about it. And too often, when a loved one becomes disabled, incapacitated, or even passes away, all of a sudden the adult children are left with trying to sort through a mess of finding things, looking for documents in shoeboxes and buried in drawers. So here's my advice to everybody. You want to have what I call a death file in a place where your family members know where it is and it contains everything. I have one. It has my will, my living trusts, a copy of every bank and investment account statement that I have, my mortgage statement, my car payment information, every single thing, my life insurance policies in there, everything in one place so that if I ever became incapacitated or passed away, my family knows where to grab that file and everything is there at their fingertips and they can immediately sort through and act on anything and everything that needs to be handled. And everybody should do that. And too few people ever think to take the time to organize their stuff. And so few take the time to talk amongst each other as family, and particularly as someone's aging and care is creeping up and getting the need for care is maybe even already actively underway. You got to talk. You got to open up and talk to each other and not ignore it and feel like, well, it's none of my business. You want to know what's going on. You want to have a plan. You want to know how the family's going to work together. Who's going to take on what roles? And it'll go much smoother than being in an emergency situation, staring at each other in a hospital room with your loved one being discharged to a rehab center the next day and you don't have a clue of what to do next.
Yeah, and that's a very uncomfortable situation, which many people find themselves in. And I think it's probably a lot less comfortable even than talking to them like years ahead of time to make sure that the plan is in place. And actually, I'm going to go meet with my own parents who are now in their early 80s with my brother and sister on a couple days from now to actually begin to get this stuff in
You're
place.
doing the right thing. And as part of that process, I recommend looking at talking to an elder law attorney, an estate planning attorney, one who maybe combines both, and gathering up all those documents. You know, mom and dad, what do you have for insurance policies? What are your investment and bank statements? Where's your mortgage statement? Is the house paid off? Where's the deed? Get it all in one spot. And now's the time to do it, not later. And also, living trusts. What are their medical directives? Do they have a will in place that when they pass away, you know how the disposition of their estate's going to take place instead of a probate court deciding it for you because they died without any of the appropriate paperwork in place, and now it's up to a court to decide how things get handled for you in a probate process.
Yeah,
You
that's
want to avoid
not a
all
lot of
that.
fun. You want to avoid all of that, right? So I have learned so much today, Chris, and I know that our viewers have as well. And so if anyone wants to get a hold of you, again, what's your phone number and website address if people want to reach out to you?
Go to our website at retirementgenius.com. Also, we have a YouTube channel full of great animated explainer videos with the Retirement Genius cartoon character talking to you about all sorts of these issues. Go to our YouTube channel, the Retirement Genius YouTube channel, and you can call us at 866-602-5000.
All right, and I will put all of that in the show notes as well. All right, Chris. Hey, listen, thank you so much. I really, really appreciate it. And I'll see you, I guess, in a few weeks in Baltimore.
Well, I'm looking forward to seeing you at the CSA conference. And Sebastian, I hope we get together again and have another chat down the road.
Subscribe now